Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez of ThinkTrading.com, and I'm joined with Manu Choudhary, who's the CEO of DMA Link and the co-founder of DeFinity. How are you this week, Manu?
Hey, Paul, not too bad. How are you keeping?
Yeah, very good, thank you. Very interesting markets at the moment. What's going on in the news?
Yeah, absolutely. So look, I'm surprised pleasantly that we've seen less downward momentum, I think, over the last week or so. So basically last week we had the infrastructure bill that was passed into law, and this is the infrastructure bill that is going to be used to build highways and roads and bridges, and also wants to extort money out of the crypto community by not defining what a broker is very clearly, and then basically making everyone adhere to essentially IRS reporting standards and also the FATF protocol. So it's not ideal. I was kind of thinking this might have had a bit of a negative impact, and it's had not a lot of impact at all. And that may be because it doesn't come into effect until 2024. Maybe the crypto trading community is somewhat more short-sighted than that, and at the moment still want to make hay while the sun shines. But I think, medium term for crypto, this is not good news, and it's certainly not good news for the United States. I can see there being quite a big exodus of businesses leaving to go to friendly jurisdictions on the back of this.
Right. And when do you think they're going to wait for more evidence of this before they do that, or do you think they're just going to move right
I think
away?
it's already. I think it's already started. I mean, there was a really interesting AMA that Charles Hoskinson is the CEO of the Cardano, well, co-founder of Cardano, sorry, and CEO of the Cardano Foundation, basically said that essentially he was quite upset by what was done, and essentially he was going to essentially do what was necessary to make sure that he's not hindered by the change of the regulations. So I'm suggesting he's already got a Swiss foundation. He's based in the United States. Does that mean he's going to leave? Yeah, potentially. But I think we will see a lot of businesses look to relocate their HQs and potentially move staff to friendly jurisdictions.
What do you think are those friendly jurisdictions? What do you think would be top of the list if you had to sort of pick
friendly
top
in the United
three?
States? Probably not something like North Korea, I think is a good. No, I think look, at the moment, you've got some very interesting jurisdictions. Thailand is a very, very, very friendly jurisdiction. Singapore is still reasonably friendly. In Europe, Switzerland obviously is very friendly. And interesting, Germany is quite friendly as well. So for instance, there's no capital gains tax on digital asset capital gains in Germany.
Wow. Okay, that's
But
very well
I,
worth knowing.
I still want to live in Germany though. But anyway, so
Berlin's very nice. I like Berlin. Berlin's a fantastic place. Frankfurt, maybe not, but
yeah, I spent way too much time in basically the north of Germany, basically seeing clients, and yeah, that's interesting part of the world, but yeah, not very much fun. Southern Germany, yes, Southern Germany is quite fun.
Yes.
Northern Germany, yeah, not so much. But yeah, so I can see this happening. It's not going to happen immediately. It's going to take maybe a year or so before this, we see the big exodus. But I think it's coming soon. So that's slightly negative to bearish news. On the more positive news, interestingly, so CBA, so Commonwealth Bank of Australia, who, as far as I could tell, were probably the most anti-crypto bank in Australia. Got quite a few mates in Oz, and they've had their accounts basically suspended or shut down because they've made a payment to Binance. Anyway, so early this week, they announced that they've incorporated crypto wallets for Ethereum, Bitcoin Cash, and Litecoin into their online banking platform.
Wow.
Which is a weird move, but I guess they can see where things are going. So yeah, so suddenly you have 6 million Aussies that can suddenly access crypto basically via the CBA app.
And there was also Tim Cook. He made a comment, didn't he?
I think he was asked a question about where is Apple going in terms of ownership of digital assets, and I think he disclosed he's basically a investor in crypto, and he owns Bitcoin.
Yes,
it's 100% personal, not corporate. So
yeah,
I don't know.
Well,
I suspect he'll change his tune sometime soon.
Yeah, I mean, knowing Apple and how they control pretty much everything from the software to the hardware, and they like to be in control, I think that they'll create their own coin. That would make more sense than they may adopt another coin, but they're much more likely to create an Apple coin of some kind.
I don't know anymore, because it's so difficult to do anything in the United States these days like this. You're basically just putting a target on your back. So I don't know. I mean, maybe they might do something novel. So maybe what they would do, and this is, I think, an easier step, would be to create, say, an Apple security token.
Mm.
So let's say at the moment you want to trade Apple at 4 a.m. on a Sunday. Well, you can't. If you have a security token, you could trade 24 hours a day, 7 days a week
Yes.
on basically a digital asset exchange. I think that, if I'm being honest, is probably something that they will get the blessing of the SEC. Their own token, I just don't think this administration would allow it. I really, they are so anti-crypto, it's unbelievable.
Talking of trading and groundbreaking technology, you mentioned a couple of videos ago about the AI anomaly detector that you were working on and incorporating into certain Bitcoin assets. Can you tell us a bit more about what's been happening?
Yeah, sure. So we basically were beta testing it for a little while. We've basically been live now for 2 weeks, and yeah, the results are pretty phenomenal. So essentially, I have given access to a couple of funds and a couple of technical traders that I know, and the feedback has been pretty astonishing. So in essence, how this works is essentially it's designed for people that are trading the markets. It's designed for people that are principally trading using technical analysis. And what it basically does is it looks for essentially anomalies. So deviations in the behavior of an asset price, essentially. And what that allows you to do as a trader is essentially look for these points of inflection. And whilst it doesn't give you a directional view, so it doesn't say it's going to go up or down, what it does do is it tells you that something is likely to happen. So if, for instance, you're looking to fade into a reversal, this is potentially the trigger. Or, for instance, if you're looking to increase your risk or decrease your risk, you could use this as the basis of doing so. And so far, it's been pretty phenomenal in terms of its accuracy. And look, it's more accurate in some assets than others. It seems to be more accurate in Cardano than it is in Bitcoin, but nonetheless, it is still pretty good.
Yeah, and it's early days, and you were saying that you take a sample per day, so there's only one kind of output at a certain time, but that's obviously going to change, and there's going to be more granularity to the calls. So there'd be much more data. It'll become much more accurate. It's still very early days, and it's doing very well.
Yeah, so look, we chose end of day intentionally because end of day data is usually pretty useless, and we kind of looked at the models that were being used, and deep learning AI is incredible for using very disparate data sets. So it was more of an experiment to see whether it would do anything, and we were astonished that 70% of the time it accurately predicts a volatility event, which is remarkable. So yes, absolutely. The next iteration will be adding another 6 digital assets to the offering. So at the moment we have Bitcoin, Ethereum, Cardano, BNB. We have Monero, and we have Polkadot. We'll add the next 6 by market cap. And then the third iteration essentially will be to add hourly data to this rather than end of day. And again, we're also, just in terms of some of the feedback we've had, we're going to look to try and break down the components. So if, for instance, there's an 85% chance of an anomaly in Bitcoin, well, what are the components? If it's 25% or 30% on-chain data, if it's 5% momentum, what is the breakdown? Just again to give traders a bit more insight. And what's interesting is there's a couple of people have come back to me who trade equity futures and said, look, what I like about this is when I was trading the S&P futures, effectively, if I was confused as to the direction of the market, I'd say, you know what, let me look at the top 30 or top 40 S&P stocks. Let me see if there's anything I can spot.
Yeah,
Is
definitely.
there something not quite right?
Yeah.
So you can look under the bonnet and then work out, actually, you know what, this is an interesting play.
Yes.
I can basically fade out of this or not.
Yeah.
Well, what you have in crypto is we've created essentially the same thing. So if you're not sure about the directional skew, if you're not sure what's likely to happen, this essentially lets you look under the bonnet. And once we break down the composition, so we break down what is on-chain, what is financial market context, what is other crypto data that is driving the anomaly forecast, I think it's going to be very, very valuable. And again, it's essentially, look, we're offering this pretty much for free. All you need to do is essentially stake one DFX token on the Clarity app, and you get access to this exclusive content.
And so that's as close to free as you can possibly get, right?
Well, notwithstanding obviously Ethereum gas fees, which I'm aware of are not ideal right now, but yes, but effectively yes, as close as we can get.
Yes, but that's obviously not a cost that you're making. You can't help that.
No, that's sadly, well, yes, not unless we do something very smart behind the scenes, which we may do at some point. But yeah, so that it's effectively free. But so far the feedback has been incredible.
Yeah.
I'm going to do an AMA, I think probably next Friday to run through some of these things because we've had some great feedback and great comments. I want to engage with the rest of the community and really get, I think more input to try and improve this. We've made it good. We want to make it awesome, and we want to make it as accessible as possible.
It's version 1.0 obviously, and it can only get better, and it's using the least amount of data or the minimum amount of data, the more data it sees, the better it becomes. It's
Absolutely.
simple equation, isn't it? So
Yeah.
brilliant stuff. Manu, was that everything? Should we go to the charts, or was
Yeah,
there?
sure. That's
Yeah,
it.
fantastic. Well, that's really exciting news there, Manu. Thank you. So I'm going to share my screen as always, and let's have a look at what's going on in the financial markets. Start off with the equities as we do, and as we saw, S&P's gone into a new high, so there's a new trend going on here, possibly a bit overbought in the short term, so we may be coming back for a correction. How big that correction will be, I'm not sure, but new high equals new trend. I mentioned last week regarding the Russell 2000 that it was getting ready to break out. And as you can see, that this was an acceleration of the trend. We'd been stuck sideways for most of the year, and I was expecting a breakdown at one point because this looked like a massive reversal, but the market has to lead the way. It has to tell us which way it's going to go. And it looked like the evidence was shifting towards the upside, which it has done now. And this really, once it's come back for a retest of this resistance, it should go back up to like 2,700 into next year. And that's taking into account of retracements and consolidations. But overall, the equity markets are looking bullish. Funnily enough, the VIX index still hasn't made a new low, which is so fascinating that this is going on. So whoever's hedging it, and again, we may be in for a short-term correction, they're not letting these their positions go. So they're definitely holding on. There's definitely divergence still. So it's a fly in the ointment that probably suggests we'll see some form of correction before a massive upward trend in the equity markets kicks off next year. There's going to be inflation. There's going to be massive inflation. That will be positive for stocks. It will be positive for I think it's going to be positive for cryptocurrencies as well. But what we're seeing is a build-up of inflation. I know base metals have come down. I've looked at those in the weekly before. But what I'd like to show you is some chart of the agricultural commodities, because they are really looking very bullish. Corn is looking to break out over 590. That's a little less bullish than some of the others. But if you look at wheat, look how that price action is exploding. Wheat is a main staple, and this going up is going to be inflationary, and it hasn't stopped yet, and it's accelerating. So wheat going up. We've got rice that's in a consolidation. This looks like a compression before it goes higher. Soybeans or sugar, sorry, this is sugar, which again is in a consolidation. Looks like it's going to go higher. We've got coffee futures, which look like, this is such a brilliant technical pattern. If this is not at 250 next year, I'll be very surprised. This is could explode higher. So coffee, sugar, wheat, rice all look like they're going to go up. Cocoa futures are going sideways. There's not much to report there. So not absolutely everything is moving up, but some of the really important ones are. So this build-up of inflation is can only get worse. So the big call was for us was that the dollar was going to rally, and we kind of maintained that for quite some time. And the dollar is rallying now. The impact on Bitcoin and cryptocurrencies we were also concerned about at one point, and the relationship seemed to break down. So a rally in the dollar didn't necessarily impact on the cryptocurrencies, which is kind of counterintuitive for me, really, because I thought, well, people are either looking at one asset or another, but it seems perhaps that they're separating them out. But either way, I think the dollar's got a bit more upside to go. We may see that correct into next year, but we're going to be watching the cryptocurrencies to see how they react to this, because this could really accelerate. The dollar could accelerate up to 96 in terms of the dollar index. The biggest component is the euro. And as you can see, if you flip the chart over, the euro is starting to collapse as we were anticipating. So it's a question of how quick this moves and whether it impacts on the other markets. So in terms of yield, the US 10-year yield had consolidated. It came back almost to the 1.37 level, but it didn't quite get there, which is good because it held the trend line. But we are eyeing this 1.77 4 level. If it breaks that, I think it will be going up, as I said before, towards 3% extremely quickly. So there is a new trend to be had here, and we'll have to see how it impacts the rest of the markets. But we're in a consolidation phase for the moment. There was profit taking in all the short bond positions. Everything bounced, but the trends in yield are still to the upside, and there's still a lot of inflationary pressures. Now, if we get over to the important cryptocurrencies, new high, we hit 69,000 dead, which is an interesting number for it to stop at. Now, in terms of the trend, it broke into a new high, and this is technically still looking good. It still looks like the market will go higher, but I don't want it to consolidate too much at these highs. I want it to move very quickly. It's not because of positions, not because of long positions. I don't have a long position in Bitcoin, but it's because the trend should accelerate at these points. When you break a new high, I don't want to see the market come back and just sit there. I want it to go back up again and extend into new highs. So for that reason, I'm willing to accept a consolidation for a short-term period, but if it takes too long, I'll get concerned that, well, we're in a reversal of some kind. But that's not the favored view at the moment. It's just a potential view. Now, where would we reverse our view and start to think that the market may be in for a bigger correction? Well, the main level is actually all the way down at 54,000, which was the breakout level to the upside. I think if it takes that out, which is quite far away, I mean, to be fair, that is a big correction. If it breaks that, then we're in for like a few months of a correction before it goes back up again. I do think next year we're going to see much higher levels regardless. It's always been a question of what's the direction, i.e. what's the journey, what's the route, how does it get there? But in the short term, it's hit the high. There's been a bit of profit taking, which is fine, but the trend is still bullish at the moment. And I'm using this breakout level, this yellow line, which was the breakout trigger, as a kind of short-term stop. So if one had bought on a breakout and wanted to sort of play the market that way, then you could use a close below 62,000 as a short-term stop loss. Then we'd be looking at like 59,000 as the next support, and if it breaks that, then we'll be looking at 54. So there's a few support levels on the way down, but ultimately there's no real resistance on the way up until we get to the 76,000 level and then potentially to the 90,000 level. So there's a few big levels on the way up, and I think eventually they will be hit, and this 127,000 level at some point next year will be hit as well. So there's some big levels to achieve. Now, if we look at the Ethereum chart, this is much smoother. So Manu was saying about looking at some other markets to predict another, and I do that a lot. When I'm not sure about one market, I'll see whether another has got a better technical pattern. Now, this is very smooth, very consistent. You see how it's just moving up in a very similar type of trend. It has what I would call an obvious signature. But because it's gone into a new high again, I would like to see this accelerate. So this rate of incline has got to move up a little bit quicker for me, because usually when a market wants to take off, it breaks up, consolidates, and then we see the lows get higher very, very quickly and the bars extend very quickly. And that means we're in a very good trading period, low volatility, high impact, which is, from a trader's point of view, a very good market. So this is a nice little consolidation, and all you can really say is that we need to break the high, nice little compression of a pattern. But if we do, and it starts to go, it could go very, very quickly. So the next few weeks are going to be kind of make or break. We're either going to see an explosion in price action, or it's just going to come down for a retracement. So either way, volatility should be going up. Now, I find this chart really interesting, the Ethereum Bitcoin spread. And at this point here, I was expecting the market to go up and take this high out, which it didn't. It corrected. I've had to redraw this line, so this wasn't support a line that I put in and it hit it. I've drawn this after the fact, but it is very good support here. And my question is, why does it keep coming back towards these levels? Usually that happens if the market wants to take it out. So before the end of the year, we could be trading through this massive resistance zone. And if that happens, Ethereum will get a massive leg up against Bitcoin. It's not a done deal. We're still in this consolidation, but every time it approaches this high, the chances of it happening increase. And if it does break, that breakout will be fast. So that's why I keep watching it. In terms of some of the other coins, Cardano it broke out and then it just came straight back again, which is bit of a disappointment. I got to be honest with you. I mean, it was disappointing in the range. Then it broke out and I thought, okay, we're off to the races. It's come back down again. It's not negative at the moment. I don't think it's a negative pattern. It's just a little too neutral for my liking. I was hoping in the weekly that it would break up, come down, and then go straight up again, as participants were like, okay, this hasn't moved yet. This is an opportunity for a catch-up play. But it's still like languishing a little bit, and could go sideways for a bit longer. But I think I'm going to give it one more week. And if it hasn't broken out, then I think the risk will start to revert for a break of this lower support line. And we might see a bigger correction, excuse me, before the market goes back up again. It will, in my view, take out 309 next year. That's going to happen. It's just a question of whether this goes down before it goes up. But that was a really good chance for it to break out, and it seems to have got stalled again, which is not really ideal. DOT, which has been doing brilliantly well, and I think a bit of profit taking in these markets is warranted. It's been a fantastic trend, really nice breakout. Bit of a sharp pullback, but it's still within the trend line, so I'm willing to still consider the upside here. But that may need to consolidate a little bit further and let the rest of the market catch up. Solana is very similar. It's still in its upward trend. It's just come back to its short-term trend line. But this trend is still up. And as long as it can hold over this support level, which it's done really nicely, this is prior resistance, which was at 220. It's broken up. It's using 220 as support. And in Elliott wave terms, this would be a 1, 2, 3, 4, and it should go for another fifth wave. Now, that would negate if it breaks 220. So I don't want to see 220 break this week. Otherwise, that pattern will be something else, and it will be a bit more corrective. And just because it's here, looking at Matic, that had broken out from its triangle. It's come back to retest it on the apex. The broad trend is still bullish, a rate that's a little slower than I would like. But again, 2.89 is a good target. It should take that out at some point. Where it gets negative here is if it breaks this apex point, I would say, would be the first tripwire, which is at 1.43. If it takes that out, then I'd be a little bit concerned about a consolidation stroke correction before the market goes up. So we could see explosive price action. We do need the markets to react. They always do react at new highs, and I don't know sentiment-wise whether people are kind of a bit, how can I put it, suspicious of this breakout and expecting the market to move down, or whether they are just, really, really bullish, whether sentiment is perhaps too bullish and we do need to cool off a bit before the market goes higher. When I had a look at the headlines, it was Bitcoin's made a new high, we're going to see a big correction. So from my point of view, it was more of the headlines I was seeing were less positive and more kind of cautious. But I don't know what you think about that, Manu. Do you think the market's cautious here, or do you think they're getting overly bullish?
So look, I kind of use a lot of the mainstream media as a bit of a reverse indicator.
Yeah.
So whenever they talk about market tops, that's when I look and think, yeah, you know what, now it's time to buy.
Yeah.
So yeah, I take it with a bit of a pinch of salt. And a lot of the firms that kind of go on CNBC and Bloomberg really are talking their own book.
Yeah.
And we've seen this so many times this year with some large investment banks making weird calls
Oh, really?
on equity markets.
Yeah.
Yeah. There will be an imminent market crash. Well, how the hell do you know? Oh, it turns out you're wrong. Okay, fine. So, I'm kind of I was really surprised with the reaction to the passing of the infrastructure bill. Really, really surprised, and that basically tells me that the market is way more bullish than I thought. And in spite of the fact that we are kind of at the upper echelons of the 10-year yield, Jerome Powell thought it necessary to say that he was looking to reduce the $120 billion of bonds that are being bought every single month. By how much, he didn't say. But this is going to cause a spike to the yield. So I'm not entirely sure how long that's going to go on for. And then interestingly, someone sent me a clip of Joe Biden. I don't know why they sent this to me, but anyway, he was talking about some nonsense. Anyway, one of the funny things he said, which I thought was hilarious, was he was assuring people that inflation was not going to get out of control. That inflation was in hand. It was going to go back to how it was. Don't worry. It's like awesome, because you're saying that it's going to go back to normal. It's going to go back to normal. But you know, the way I look at the supply chain, the way you went through those charts just now, I think he might be wrong. And actually, just in terms of the comments on the softs, what do you think? Time to panic buy?
I don't think panic buy. I don't think that's ever a good idea. But I do think it's worth stocking up. It's worth stocking up anyway, just because we can have supply chain problems, and we're going into the winter, obviously in this hemisphere. So it would be worthwhile just buying a few extra supplies, so you don't have to worry. I mean, I think the images of people, you know, queuing and empty shelves again is not one that's going to go away. But I'm not suggesting that there will be any forms of shortage. I just think prices are just going to start to go up at a more alarming rate. So you can only protect yourself so much from that. But of course, the other way that you can protect yourself is to buy inflationary hedges, which is, of course, you know, things like gold and silver and cryptocurrencies. So that's why I think the space is going to be so important going forward next year, even if there is an easing of the supply chain problems, given that the Baltic Dry Index has come down. So, as an individual, I think it's a much neater solution just to move your capital into something that hedges against it.
Yeah, no, agree, 100%.
Brilliant stuff. Well, look, Manu, thanks so much for your thoughts there. It's really interesting. Let us know what you think. Do you think there's going to be inflation, deflation? What's a great way, in your view, to hedge against it? Is Joe Biden right? Will it go back down again? Is he right about anything? Who knows? Anyway, thanks for listening. Really appreciate it. And we'll see you next time.